Hello guys, welcome to Traders Mastering. In this video, I'm going to talk about Larry Lynn's most profitable day trading strategy, which is called the momentum breakout. So first of all, let's see what is momentum breakout. Momentum breakout is a price breakout after a market pause in trend to exceed its previous range pause in trend. Whenever price creates a range in the market, know that there is a breakout attached to that price that is going to exceed either up or down, depends on the direction of the trend. So what is Larry Lynn's? Larry Lynn's momentum breakout is a daily breakout strategy that has been used to catch previous day continuation move in the market for consistent profit. So this is very simple. So if you notice on this daily candlestick, price was bullish. After price was bullish, if you notice on the daily candlestick, price create a momentum bullish candle, and this momentum bullish candle, it closes at least 75% of its range when the candle is bullish. So we have to wait on the next day for price to take out this previous day's high, which is called this daily candlestick, to take out this previous day high, and we look for a buying scenario. So it's very simple. Now on the bearish scenario also, when price creates a very black down candle, all you have to wait for is when price closes at least 75% from high to the low. When price closes at least 75% of its range, you look for a breakout strategy to sell from. This bullish candle is going to be the daily candlestick. All we have to do is to go to our 1 hour chart, which is this smaller candle presenting the breakout in the middle of this breakout line. We go to the 1 hour chart and wait for when price close above the high, the previous day's high, and we look for a buy entry at this place, and we'll set our stop loss. So you understand what I'm saying? Let me come again. Once a momentum candlestick form on the daily chart, all you have to do is to mark that daily candlestick and make sure that daily candlestick is closes at least 75% of its range when it's bullish. You go to your 1 hour chart, mark your time window, which is 8 p.m. to 5 a.m. You wait for when 1 hour candlestick close above its previous daily high and look for a buy entry and set your stop loss below the 1 hour short term before the breakout and look for at least 2 to 1 hour. So you understand what I'm saying. Same thing also happened to the bearish breakout. So this big candle here is going to be our daily candlestick, and this smaller candle is going to represent our 1 hour candlestick. So what are we going to do? If you notice, this candle here, this daily candlestick, is going to be our previous day low that form based on it's a bearish candlestick. Since it's a bearish candlestick, what are you going to do? You are going to set a line breakout. When price closes below the previous day low, you look for a set scenario and set your stop loss directly to the 1 hour short term before the price breakout below the previous day low. So you understand what I'm saying? Once this bearish candlestick form on the daily chart and it closes below 75% of its body, what are you going to do? You are going to mark that low. On the previous day, which is the current day, you are going to go to your 1 hour chart and look for when price closes below the previous day low on the 1 hour chart and set your stop loss directly to the 1 hour short term low before it breaks out. So that is how you are going to trade it. So let's dive into our chart and see how profitable this strategy is. This is our chart. Before we start looking for our candlestick, how are we going to determine if the candlestick closes at least 75% of its range? So let's go to our Fib retracement, which is the Fibonacci retracement. Once you click on the Fibonacci retracement on the trading view, all you have to do is to set it to 0.75. Look at my trading view Fibonacci. You can also set it on the MT4 if you know how to use the MT4. So I'm using the trading view for this purpose. So what are we seeing? We see 0.61%. We see a new ratio, which is 0.75. Once you are done with that, click on OK and you are good to go. Now you understand how you can set the Fibonacci retracement if the candlestick closes at least 75% of its ranges when looking for bullish or bearish setup. Let's see this on our chart. So first of all, if you notice, there's a lot of series of momentum candlestick which is called momentum breakout. Like I said in the video, it's a momentum breakout. So let's look at this candlestick each separately. So let's see if this candlestick closes 75% of its range. If we are going to look for a momentum breakout, all you have to do is to draw from the high to the low when looking for a close. So let's see. No, candlestick does not closes at least 75% of its range, which is an error in this instance. You don't look to buy at this instance. This is an error. It's not a momentum candlestick. So you understand, this is not a momentum trade. You skip it and you look for another bullish candlestick, and you point from the high to the low. The candlestick closes at 5% of its range. So what do? You mark this high to look for a buying scenario, which is tomorrow, which is our buy setup. We skip it. This completes our 75% of its range. Same thing also happened to this. What happened? We take it from the high to the low. Candlestick closes 75% of its range, so good. We are good to go. We take our breakout tomorrow. What happened? Notice this candlestick does not close 75% of its range. We just know that this candlestick, so you skip it. You wait for the previous day for candlestick to close at least 75% of its range. What happened? Candlestick closes, so you mark this I. What happened? You also look for if the candlestick closes 75% of its range. Candlestick closes 75% of its range, which is a bullish setup. Take out and you mark the eye of it. That is it. Now you understand how this momentum breakout is. So let's go to our 1 hour chart and see how we can be able to trade this strategy on the SAUSD, which is the gold against the US dollar. Let's see how we can be able, after the previous day closes 75% of its previous range. What happened on the next day? We look for a momentum breakout to the upside, and we look for when the 1 hour candlestick closes above its previous day, and we enter on it, and we set our stop loss below the 1 hour short term low before the breakout of the previous day. So we target at least 2 to 1 arrow. Our profit got 8. This is the example 1. The example 2, the same thing. What happened? The previous day closes 75% of its previous range. So on the current day we are trading, you look for a breakout momentum at the upside, which is called this one, which is called candlestick closes above its previous high. What are you going to do? You enter a buy setup and you set your stop loss below the previous 1 hour short term low, and you target at least 2 to 1 arrow. That is it. Let's see what happened. Same thing also applies to it. The previous day closes 75% of its previous range. What are you going to do? You look for a candlestick that closes above its previous high, and you look for at least 2 to 1 arrow, which our profit got it at this instance. Are you getting what I'm saying? Our profit got it. In the previous day also, look at what happened. Our previous day, which is this, closes at least 75% of its previous range. What are you going to do? You look for a buying scenario at this instance. You set your stop loss at least below the 1 hour short term low, and you look for at least 2 to 1 arrow. So do you see how profitable this trading strategy is? So that is it for this example. So let's quickly look at the bearish example on the GBP USD, which is the pounds against the dollar. First of all, let's see on this day, which is the February 2, 2024, we notice that candlestick was bearish. So all we have to do is to look for, is the candlestick close it 75% of its ranges when bearish? Yes or no? Use your Fibonacci retracement, draw from the low to the high. All I can say here, the Fibonacci retracement, the candlestick closes 75% of its ranges, which is good for we to enter a breakout, a momentum breakout on the next day. So this is a momentum breakthrough. What do we do next? Let's go to our 1 hour chart and see what is going on the chart. This is our 1 hour chart. If you notice, the candlestick closes 75% of its ranges, closes bearish 75% of its ranges. What are you going to do? You are going to mark this low for we to look for a momentum breakout the next day. The 1 hour candlestick closes below the previous day low. What do? You look for a selling scenario at the candle close and set your stop loss above the 1 hour short term before it breaks out, and you look for at least 2 to 1 arrow. So do you see how profitable this trading strategy is? This is called the momentum breakthrough breakout by Larry Lens for a profitable day trading strategy. This is a momentum breakout strategy, and what we are going to do here is to look for our time window when we are going to trade, so that we will know when we are going to enter on this trade. First, we go to our daily chart. We identify our daily candlestick with a strong momentum body close, which is it closed at least 75% of its range. When same thing also apply to the bearish scenario, to close below 75% of its range. It closed 75% of its range when bullish, and it closed 75% of its range when bearish. So you understand what I'm saying? On the second scenario, we mark the high for that bullish candle and mark the low for a bearish candle also. If you notice, when the candle is bullish, maybe we are looking for a bullish, a buy scenario, we want that candle to, we need to mark that candle high. When we notice that the candle is a bullish candle, we need to mark that candle high so that we can be able to enter on the breakout. Same thing also apply to the bearish scenario. When the candle is bearish, we mark the candle low for we to enter on the breakout. So the theory, we go to our 1 hour and look for a bullish candlestick that close above the daily high when it's bullish, and bearish candle below the daily low when it's bearish. You set your stop loss on 1 hour short term close to the breakout high or low. You use at least 2 to 1 arrow, which is called the risk reward ratio. In my next video, I'm going to talk about Larry Lens' most profitable trading strategy, which is called the support and resistance trading strategy of the Larry Lens. So if you really enjoyed this video, please, I will advise you to please like, subscribe and share this content to your friends and family. I will see you that time. Happy trading. God bless.